confirm with me that it's actually started. The recording. This is BTC USD by the SPX, which looks different than the SPX by. I was actually looking at the SPX by divided by the BTC SPX divided by BTC USD, and then push enter on that. Let's see what that gives us. And then go to a weekly chart. I don't know what you were talking about, the 4316 and the S&P 500 and stuff like that, but what I do see here is this leg, three wave down, and this leg again. So that one's matching that one. So we might have a really nice outperformance of Bitcoin to the S&P 500 coming up, along with the standard 4-year cycle. Those match. Those do match. Ooh. Okay. Let's do something stupid. That one goes down like that. That one, dang, dang, dang. And then from here, does that match? That match that with that, and then this is a. I don't know, but it looks like it's a sell setup on this. So you sell your S&P 500 and get into Bitcoin for another leg down. That's the idea. Yeah, to the 1618. How about that? One there. From that leg, 1, 2, 3, 4, 5. Some kind of weird flat. 1, 2, 3, 4, 5. 4, 5. And then bounce back up again. So the math, I don't know what you're talking, but what did I see today? I wanted to discuss the macro environment with the potential of a crash that we're kind of looking for, as I have described there with my red line, on like a monthly scale. And I got this video today that I was watching talking about the central bank digital currency and its release and how markets would play with that. Is kind of what got me thinking, hey, let's go live. I'm have to do let's just do a quarterly. Screw it. So this is the overall chart pattern that I'm kind of watching for. Big red leg down to match the 1929. I don't know if it comes directly from where we're at or if we make one more high and then get this. But I was listening to this guy talking today, and he said something about getting rid of all the debt because all debt is denominated in US dollars. But if the central bank digital currency comes out, that's kind of a get out of jail free card where by law, like the contracts don't state that it's your debt is issued in a central bank digital currency, whatever they call it. It's issued in US dollar. So if the US dollar collapses versus the new central bank digital currency, then your debts will become so cheap. And this is what got me thinking of this chart. If this does come down, then I would expect the central bank digital currency to be released like right at the bottom here. And if that debt becomes real cheap, that will allow people to be spending their money, and we could have a big economic recovery very quickly, like even in markets and stuff, because people will have money to spend, which would match this leg here. So you have the leg down, the next leg, just for symmetry, comes up into this box. So then the leg comes up and we make another box up there. And then price goes sideways for 20 years. Where is my box? So we go like current levels and we make a box just like that box to repeat that kind of price action. Where after this big crash, people are skeptical of getting into the markets. So they don't want to buy, they're actually selling. But the market is propped up due to a devaluation of currency because of the universal basic income that devalues the currency. That everybody gets that because everybody's so panicked that the economy took a shit, and we kind of just bounce around for like a decade, maybe longer, in a similar crappy price action like that. You just trade it up and down in the range for like 10 years, which should be ridiculous, but totally plausible price action. But if the debt is forgiven or becomes really cheap, people will have money to spend, and it will be a V-shaped recovery. It would mimic this V shape right here, going in the opposite direction. So there was merit to what dude was talking about. So I was like, hey, let's expand on this idea and get a discussion going for those that do understand the charts and price action. Uh, so what does that mean for assets? I would expect, this is just my theory, but I think when you reach the bottom here, you you're gonna have people trying to escape out of assets so hard that the dollar is gonna spike. And maybe that makes a wave five for the dollar. I don't know. Let's check the DXY and see if there's some confluence there. Am I still live, guys? Beautiful. Beautiful. So then we would postulate that maybe we've just completed a wave three up here. So you got 1, 2, 1, 2, 3, 4, 5. We come back down for 4 and then spike up for 5 for our little panic in the markets. Or we're just going down from here, which I think we were talking about last week when I was live. And that's why that marking is on there. Maybe. How do I get rid of that? What if let's pull some fibs on this DXY. We got a 1, so 2. That actually reaches 3. So, we could be going up to here. We got a little 1, 2, 3, consolidate, spike up to 130. Hard to say. Hard to say. I do think that we have some consolidation to do here on the dollar. But I think, like Jim was saying, we consolidate for a while, and that allows the other markets to kind of pull back, go up a little bit, and then maybe we reach the 2618. What would that be? That would just be an ABC, and then tank again, essentially. Take it out a log scale. See, that made the 1618, but we crossed into, that would be some kind of diagonal then. It does look awfully reversalish, especially if it ends the year any lower. That would be an engulfing candle. Yeah, 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 yeah. What if we were to just, put a little box there? So this is just swing failure pattern is if this comes back inside the box, it's likely to find find resistance again. But for now, you have to expect it's find support here. So I would expect first and foremost a bounce right about there, 102. So maybe you do get the three wave pullback there, three waves up and then down again, and then back up and spike, or that gets back in the box and then you're anything chit chat. We have a DXY idea from a noob. Can I look at it? Where did you do that? Did you put it in here? You posted something, Chester. Inbox. Oh, I don't know how to do the chat in here. Did he put it in crypto majors? No. Yeah, I'm looking. I'm looking for it. I can't find it. Where is it? Maybe I got to be in there. Hold on. Okay, here we go. My new DXY idea. Yeah, pretty much that. Pay attention to liquidity below. You see liquidity to the left. There's an area for stop losses. What are you on the daily? Pull up the daily on there. I'll show you what I mean. I'm not even paying attention to like divergences and stuff like that. But we broke the parabolic trend. But what I'm expecting is these lows to be taken out, these stop losses to be taken over here. So what does that mean? It means this. Yeah, we'll got maybe another bounce up and then take out the lows. And that would be ABC, ABC, ABC of the like 1, 2, 3, 4, 5 variety, three waves back and then drop. That would be crazy if the dollar does drop from here. I mean, what the heck? That would be weird after such a substantial run. Oh, it still has this. This is kind of a Bitcoin pattern that's putting that Bitcoin's been doing all year, where the C wave is truncated. It goes one, two, then 1, 2, 3, 4, 5, and then back up, and then makes another five, and that's all you get. That's considered an ABC because it's five waves. It's a five waves down, take a long. Just it's going to break the top. Yeah, I wonder what it all means for the dollar. I mean, got Ghana right now. They're saying they're going to purchase oil with their gold reserves or whatever they're mining out of the ground starting next year, which is freaking crazy. I mean, people have got killed for doing less. Like, uh, Okay, what if it's not an incentive and it's more fear based, like panic into it? Yeah, either or works. So okay, fuck. I would expect it'll look like a crash. We'll check on that in a second. The projections of that. Let me put this in log scale. Let me put this on line chart. So what I'm also seeing here is ABC here, matching ABC here. Place the macrofibs on the NASDAQ, DXY. Oh, Chester, why can't you just speak up? You can speak, dude. You can interrupt. We're not all gay in here about that. Um, and I need. Okay, this. We'll turn this red. Matches with that. And then this leg here, we'll turn this one yellow to match with this leg here. So this pattern can all be complete right there. This could be all you get out of the DXY. It is possible based on this pattern. Like this is a complete move. Yellow to the red to the ABC up to the red to the yellow. That's a completed move. You have ABC, you have your ABC, and you have your final leg there, which I think measures perfectly. Trend based fib extension from the bottom, measure that leg up, project from the bottom of that leg, hits the 1-to-1. Perfect. I mean, technically in Forex, this is a completed move. And it got everybody really bullish on the dollar. Like people don't think the dollar is going to stop. Like cash is no longer trash. Like people are expecting this to keep going. Which, if the other countries start like heavily de-dollarizing and just go BRICS nation, gold backed currency through the BRICS nation, yeah, dollar's toast. Nobody's going to want the dollar. So if the dollar topped here, comes back inside the box, bounces here, this is your sell, it dies. And how does it die? With the RINF. ProShares Inflation Expectations ETF that is going to moonshot. On a weekly scale, this is a reversal, a major reversal. So for the next 10 years, we should be seeing inflation after we get this pullback, grab liquidity, and up it goes. So if we're inflating that badly, maybe some other currencies are getting stronger that would have to be in the basket of currencies against the US dollar, namely the euro. But the euro, I don't think the euro is that strong either. Wait. Ooh, ooh, ooh. Let's check that out. UK 100. The euro is a piece of crap, but it is in Europe, as is the UK. Now you seeing what the UK is doing. Using this as kind of a proxy for the whole European area. But like this is my distribution zone, and I've been waiting for those liquidities to be taken, break above the box. My target was 8,000 back inside the box. Then the UK 100 is toast, and it just goes down into bear market territory, recession, whatever you want to call it, for the next 2 3 years. And this would strengthen the euro. It should. It should strengthen the GBP as well. The Great British Pound, the euro. If their markets are collapsing, it would technically go into their currency. People would be selling it for their currency, I'm guessing. Which, if that strengthens their currency, the dollar is going to look weak by comparison, and capital flows. Hmm. What do you mean by passing the buck? Like, if you have these markets going down, I think they do it in four. I think they can get it done in 4 years. With the that initial S&P, the SPX chart I shared at the beginning there, how that you have that red leg down and then the recovery, the V-shaped recovery. That's a 2 years down, 2 years up type of chart pattern. And I think the central bank digital currency was released at the bottom of that leg, and then that's the reason for the economic recovery, because people are going to have money to spend if the debts are devalued, and that would just lead to economic growth like crazy. So, but this would lead to potentially the S&P 500 going up. Yeah, especially if the dollar is weakening. I was kind of expecting the US dollar to strengthen at the same time as the SPX. Like, this is my trigger. Actually, just waiting for the S&P to break out and go up. Is this breaking out and then just crashing, and the S&P pulls back and then moonshots out of the range. The GBP, the S&P 500 versus the Great British Pound. Okay, SPX divided by Great British Pound. A spot index. GBP USD. I guess I'm gonna have to do a GBP USD. Hmm. What are you doing to me, bro? What is this? Right there. Find support again. That's ABC, 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 and then up. Liquidity, bounce back up. Took liquidity, bounce back up. Grab that liquidity. Oh, it took it all. Would I trade that long or short? Oof. On a weekly scale. I don't know. Well, it already took liquidity up here though. It already stopped those people out. So technically want to come back here to see about support. Theoretically, is there some kind of RSI? Nothing much there. What about a daily? You charting this on the daily or weekly or what? I'm making you do it. Uh-huh. Uh-huh. Oh, that's hard to say. I mean, it's definitely a nice box, but it's getting to be a nice box. But let's just look at what we're seeing here. The brush. I'm gonna brush in some. Match that leg with that leg. You probably have to do it on a line chart though. Why are you doing this to me? Oh, that's why. Okay, cool. And now we're matching this leg up pink, and we'll put that one red, and we make this one up in red. And now we need the leg down first. This leg down that we make blue. This leg down to reach the bottom here to retest that ABC. Then up. Let's draw the leg first. This leg. Make him weird red color. Then this one up here again, just to mess with people. And then this weird leg. And we'll make that one purple. Pick liquidity down there. Then you get your 5 wave. Let's look at a weekly chart and see if it's got history. Whoa! I did the gym. Crap. Mm-mm. Oh, this thing's got. Ooh, hold on. This leg matches this leg. Yeah, look at that. Bing. Man, that looks almost complete, if not completed already. Check the wicks. Didn't quite make the 1-to-1. But yeah, wave 5 up into this box area right here. And it's complete. So that would be S&P make a little up move on a weekly scale. If those legs actually are the matching legs. They look like they can be. It was this 2009 SPX. Come on. Am I still live, gentlemen? It looks like my internet's going slowly. Mm-mm. I'm maxing out my trading view. Check out TRDR while we wait. You guys can't see my TRDR. Oh, what the heck is this? Oh, I'm still on Chester's chart. That's why. Crap, now I'm fucked. Okay. 628. 16,628. We're on a 4, a green 4. Yeah. You're still just dancing here. What the frick? There we go. Let's try this one. Oh, this one's got shit on it too. Ah, doing a gym. I did another gym. This all matches. This one matches very nicely with this one. And pulled up that. So there's an ABC, ABC. That leg's there and that leg's there. This looks complete. This whole thing looks complete. I don't know about it. Last hurrah in there. Did not make my wave 5 target on this chart, which I don't even know when the hell I put that there. This is not my usual chart. Oh, that's where I got wave 5 from that, using that as a 1 2. 1 2, 1 2 3 4 5. A B C of some sort. And you just need a little pop up. See, this hit the 1618, just past it right there. An elusive ABCDE expanding triangle. Very rare in markets, but it's a nice megaphone pattern, which is a topping pattern. And blow off top. So maybe we just get a little one more and then done, just to grab that liquidity, only because everybody's so bearish. And the UK markets would be the catalyst. So if the UK markets collapse, then the capital flows to the US and gold. I think gold gets a bid as well. And the US markets could have one more little parabolic. Oh my gosh, I gotta get in here. And we have gold. Gold. Oh, what the heck? Oh, this is just my history of shit? Okay. Fed funds. Well, this is not like on my phone. On my phone, I got my checklist or whatever. And this is my gold chart that is opposite of Seth's gold chart. Both valid, very valid charts. I don't like the double top. To me, that's a target. Came back, grabbed liquidity, back inside the box now, as we could see. So my target is actually up here, top of the box. Grab that liquidity, and it just matches this leg right here. Box, box, matching that leg up there, and then I'm expecting the crash. So S&P 500 one more high, gold one more high, and crash. So what does that do for our good old buddy BTC? Mm, mm, mm. We have the index. We do have the index. Now, I do wonder what's going to happen with Bitcoin, because Bitcoin does its little halvening 4-year cycles. But what does it do in a collapse? Is it going to magically become the safe haven? I don't know. I don't know that I believe that. I am.
I'll take no for 500, Alex.
We're fresh out of those. We're only going up. Um, so I am postulating that maybe after this move completes down to 13, 14 grand or whatever, that we make this yellow leg up, to, I think 35 was the target, that 6 month order block right up there. And then we repeat this yellow leg down, just a big crash that makes it a similar, there'll be a similar gap in price between the previous all-time high and that 69,000 high, and a similar percentage would be your low, technically, theoretically. And then we do another cycle, another standard Bitcoin cycle, and it doesn't care what's going on in the rest of the world. It doesn't care that gold has peaked, is selling off, that the S&P 500 is selling off. Theoretically could happen based on the change in behavior that we're experiencing with Bitcoin, because this was the previous all-time high and never in history have we came back and actually touched it. And we've actually went below it now. Kind of makes me think that we may have a little bit bigger of a top going on in Bitcoin, and we've got an a B, A. Where's my 6 month order block? Somewhere up there. And we actually do get a crashy crash to take out those liquidities down there. Um, so maybe the S&P 500 makes all-time high, gold makes all-time high, Bitcoin just makes a 50% retrace due to the macro environment of sort of risk off, and people are weary about getting into crypto with regulations coming and all that. That'll stifle everything, which, eventually Bitcoin reaches down here, putters around here for 2 years, and you get your Bitcoin ETF, and then you're going. But I mean, this would be a nice wave 4, wave 5, and then wave 4 to back to the previous degree, wave 4. That makes sense to me, with all the kind of hodlers and exuberance in the market. And what's the next 10x coin? People are still looking at, how do I make money in crypto, which I don't know that you can do that anymore. I think there's too many new people that started trading in the past 2 years, and it's kind of getting crowded with a bunch of new people, so they all get shaken out. Yeah, so that purple leg up, repeating this leg, that would be, 150 grand or whatever. That would be the collapse of the dollar scenario. Whereas this crash, the ABC, would be your Great Depression scenario, and nobody has any money to buy Bitcoin, and then you just sit here in accumulation for 2 years before getting a little uptrend going, crash, and then some kind of stupid moonshot. So yeah, it really depends on the currencies. Like I mean, we're looking at sovereign debt crises coming on, and this is, I mean, really, it's what gold and Bitcoin are made for countries' currencies just devaluing down to crap. And if you devalue your currency, assets move up in price in all markets. Everything becomes expensive. Eventually, I see that, but I also see a deflationary spike coming soon with the IRINF chart, that inflation's expectations. Looks like it wants to come down, but it did complete a 5 wave reversal off the bottom. So I'm expecting a deflationary spike, jump into assets, and then ride them up for the next 6 years or something like that. But those inflation expectations coming down could lead to people thinking the Fed pivots or the Fed slows down, and that gives you your bull market real quick. And then inflation starts getting out of control, and then people are like, I don't know where to put my money. Where do I go bonds? No. Do I go S&P? Do I go crypto? What do I do? Oh, that would suck. Just stay on the just stay on the lower end of the trend line. Just we're gonna break it eventually, guys, and never do. Oh, that would suck. Well, dude, if this pattern just plays out, I mean, this is definitely tradable. Like, I would be looking to, if the patterns look right, I would take the long down here with the stop loss down there. But I'm definitely going to be like, if I'm getting my leverage positions in down here, even some spot. I mean, I'll throw some money down in the market. I already actually started allocating. I'll take uh I'll take a nice chunk of it off right there at the 6 month order block as soon as it's making a little toppy, especially if it looks like this leg in reverse and you start to see it dancing around in this area, like dancing around just like that in reverse, then you get that crash down one leg and then you do a leading diagonal and then pop up by that pullback, by that pullback, by that pullback, and just do the whole thing in reverse. I'm down to give it a shot, but if it breaks that low and closes below that, I would short the retrace and expect crashy crash. It really depends on what the indicators look like at the time, what the macro outlook looks like at the time. Because like if you're seeing gold that is peaked, S&P 500 peaked, the dollar is ripping up or whatever, and markets are crashing. Either capital all flows to the dollar, and anything that's liquid gets sold for U.S. dollars. And Bitcoin is very liquid for such a thing. I mean, that's the first thing that sold off on the COVID drop. That started selling off 2 days before the S&P 500. So maybe it's the leading indicator. It'll start dropping before everything else. But it would be very curious if you make the yellow leg and you stop reverse and the S&P 500 keeps collapsing down. Then capital flows might be going into the dollar and Bitcoin just does its cycle the way it always does, which I think would piss off the entire world and be like, why is Bitcoin moonshotting and everything else is taking a shit? So yeah, I'll definitely have some moon bags waiting for that scenario. I do have some Bitcoin that I don't think I'll ever sell, even if you do get the collapsy scenario. I'm not too worried about it because if this ABC does play, that's right when your central bank digital currency gets released, and you'll have restrictions where you won't be able to buy Bitcoin at this low, or it'll be very difficult or something. I would foresee that happening. Yeah, even if it's delisted, though, you can still do the local Bitcoins or whatever and go peer to peer somehow. But would anybody be willing to sell it at 3K? Eh, maybe. So this is, yeah, something that I was also contemplating was if you get this leg down and it's crashing before the central bank currency is released, you might have it bouncing around the 6,000 and people are like, ooh, call them bottom, but it still goes lower, but you can't buy it down there. So it might be a good idea to pick up around 6,000 regardless and just say, yeah, it's going to go down 50% more, but I give two shits, whatever, because you might not be able to get it. Because that's always my fear is you're not going to be able to buy it until it's back up here, and they're like, okay, you're allowed to buy it again. We relisted it now. You can buy it. It's 90,000. So good luck. But the same thing with gold. Yeah, you can get it at $3.55. Uh, when it retags the previous all-time high. Like, here, you can buy this. Like, ooh. And then you get your little wave up to 560 or $6, and it's like, wee. And then it all falls apart. Then maybe even standard XRP style. 3 months. Can we fit the monthly chart? Mm-mm. Ooh, 1, 2, 3, 4, 5. No, wave three would be the shortest, wouldn't it? Mm-mm. I didn't even make the 618. $1.4 million would be the 1618. We almost made the 1272. Actually, we did make the 1272. Barely. That's interesting. That's very interesting. Man, you gotta think. Hold on. Where's my thing? I can delete that. Delete that guy. So just macro style. I'd be damned if this doesn't look like an A, B, C wave four of wave three. 1, 2, 3, 4, 5. Wave one is longer than wave three, and wave five would be the shortest. So you're extended in wave one, so you don't get an extension in the other waves. Let's take the fib based, chin based fib extension, project from one up to three, project from the bottom of four. Yeah, something like that. That would be a death of the US dollar. I mean, really, Bitcoin over 100,000 is something's wrong with the dollar. It's collapsing. Hmm. This is in log scale though, but say this yellow leg, the green and yellow leg do play out. For the shits and the giggles, let's say we go up to 35,000 for that 6 month order block, crash back down to the lows. Yeah, to 222,000, which is that was a target of mine. This thing's going to 1 million, guys. Not even close. That's when the government crackdown is like so huge. Be like, okay, this Bitcoin thing has gotten out of control. This is ridiculous. It's just internet money, guys. What the hell? It's fake. Ooh, this would be even better on a log scale. So my target from early 2019 was $333,000. So say you make a low here at 13, make it up to that 6 month order block, and only retrace to 20K. Find that as support again. Wave three making it to 116. I think there'll be a lot of profit taking at anywhere above 100K regardless. Come back under 100K. That's all there was, guys. Sorry. And then a 2 month moonshot of 100 grand up. And I don't even remember why I had the target of $333,000. I don't even remember why. I just remember looking at it from down here and just being like, okay, a triangle here, something. I had the target of 64,000. That one I nailed pretty well. I don't remember how I got that one. B-Wave starting as a 1-2. Oh, from down here as a 5 wave up 2. Where's your bottom? 13K? What oh, the B wave starting. Okay. You're a jerk. Ta-da, yeah. Yeah, but this wave four is too fuggled now. I mean, that's just I don't like it. Where's your three? Three, and 5 as a wave four? Man, that's a deep wave four. You're almost touching your wave one. So does that invalidate if you touch 13,800? An expanding ending diagonal, the elusive. Let's check this candle. This candle traded 13,870.63. What I find very interesting about see, this is why I think we're going to this level. Look at those candle closes there on a monthly, and then the candle touch. And I think it's also on a quarterly chart. It's the same. Yeah, quarterly. It's the same thing. That's why I think that gets tagged. And the chart pattern just works with the what was it, 2 day chart? I think I was on a 2 day chart. Give me 2 days for 500. Wah. I'm seeing us repeating this leg. That one matches that. Get your ABC right there. That one is what we're doing now. Is it complete? I don't like it as complete just yet. Because it looks like this leg we just did, it looks like this leg. And we're just dancing around here. And then we get the one more drop down, just dances a little bit, and one more drop. And it makes that little swoop swoop. And then we have this leg that goes up to retest the bottom of this crap. Take liquidity there, take liquidity there, take liquidity there. and it'll look like a three-wave move. Looks like a three-wave, and then get this stupid drop because that'll definitely suck people in. If you get a repeat of this leg, that just looks like three waves up to a corrective level, 50%, and then you get this hard push down. If you get that price action, that I'd likely be looking to buy that because it would just look like a total fake out, like it was trying to tell people short it. It's going down to zero, guys, because you're getting that same. I mean, that's what happened during this drop. People were like, "Oh, this thing's going down." And where did it lead to? Trend-based fib extension. There was so many people calling this for 5 waves down. They were measuring it like that and being like, "We got the 1618. We still need to hit this level. Need to at least make it down to 24." Never got that 24. And uh, Wax was talking about this when this happened. He's like, "Look what they want. They want you to sell. They got you to the 1618, and they're just telling everybody it's going down. They're going to keep faking it to the down, and they're going to go up with it." He's like, "Likely you're going to look for your buys, at least up to here, and then we'll see." And it just kept on going. Ended up being a pretty good call. But yeah, I mean, if that, whoa, don't move the fractal. What the fuck? Yeah, so that's how I got those legs. I just took the pattern, flipped it, reversed it, and put it over here. So that leg matches that leg in reverse. That leg matches that leg in reverse, and then this one is just doing its thing. This one didn't quite play out. It took too long, so it's over here now. Which I don't update this chart very often. Yeah, I'd like to see that price action back up to here on a wick, right up to there, and then crash, and then moonshot back up, find support where it was rejected before, and then just hey, that'd be cool price action. I'm down with that, but I would be taking some monies off at the 6 month order block or close to it in case of the 3,600 price target. Only because of the change in behavior. I really don't like the fact that it came down to previous all time high, which we've never had that happen in Bitcoin's history on a monthly chart. And we go down, and not even close. Every time it goes up, it retraces a bit. There's your all time high there. Didn't even come close. All time high there, not even close. And now we are touching. So my only bullish argument is we've been in a correction wave 4 since 2018, and that's what I think. I don't think this is a 1, 2, 3, 4, 5, but I do only see one more leg up if we get it. So definitely time to be cautious. If regulations don't come this year, they certainly will be next cycle, or that could be the reason for the downturn in the next cycle. Just regulation after regulation. So that kind of answers your question how to project for for the next cycle. If you want to use targets like that, I'd be conservative though, and you start taking profits at the 6 month order block because that's just bad to have a 6 month bearish engulfing candle. That just looks horrendous on a chart right there at 34,355. That's bad. That says for the next 2 years you're going choppy sideways and down theoretically. Bitcoin is likely to close a 1 year bearish engulfing candle for the entire year. It has never done anything like that before. That's bad. Where's that go to? 29,000. So we might find heavy resistance at 29. So that's probably for that three wave looking thing. It might A wave up to 29, pull back to 24, and then up to 35 to make it look like a three wave, then crash back down to the lows, and then just, I'm totally going to break down. Here we go. We're going to zero. And then just like, no, it's not. And just, body closes 13,627. Well, let's check the exact number is, where is it? Where's my close? No, 36, 30, 13,888 is the close, according to that number up top, right up there. Whoa, fucker. Right up there, 13,888. So yeah, that's it's a target. It's an obvious bounce point. It should bounce there, but it'll likely find resistance at the 29K, 28K area. And that should actually, yeah, that's your first liquidity too. If you break up out of the box. Ah, come on. Out of this box, we broke underneath it, and you eventually close back inside the box, your target becomes top of the box. Grab all that liquidity, and then you're likely to retrace. So that'll be your 5, 3 back, and 5 back up to here to take this liquidity, and never make it up to here. Just be like, no, can't make it up there. I don't know. It's not going in. But why 38? I probably have plenty of boxes. No, not on this chart. Let's check here. Nope. Um, we have any other Bitcoin charts? Oh, is anybody interested in that DAG token? That's an excellent chart that I shared. It's a great chart. Damn it, I don't know what chart this is. Oh, this is my cycles chart. Okay, let's start deleting some crap off of this chart. You might want to stop the recording so it's not too much to upload because we kind of went over everything.